Here at VRIC 2017, I've got here John Kaiser. John, fresh off a Trump presidency, some good, some bad. I've heard some things about trying to take apart NAFTA, take apart the TPP. What does this spell in general for the resource sector as you see it?
Well, the attempt to pull the plug on globalized trade is a non-starter. Trump does not understand that these transnational companies have assets all around the world. It's not really about America first. His vision of turning America into a hermit nation, maybe something like North Korea, self-enclosed and autarky, it's just not going to happen. Now, I do think his desire to boost infrastructure. America is in drastic need of renewal. As long as there was a Democratic presidency in place, the Republicans were not going to allow this. Historically, every time the Republicans have been in power as the presidency, they have discarded their rhetoric and cranked up the debt by a greater amount than any prior administration. So I expect the debt to go from its $18 trillion level probably to $30 trillion over the next while, all in the name of renewing America's infrastructure, if Trump can get the go-ahead from the Republican Party.
Well, that's to be said, but as far as taking apart some of these trade agreements, though, I mean, you say you stymie trade globally because it's already basically inset.
Global supply chains, they're global. Even American companies manufacturing in America source some of their components elsewhere. The big move during the prior decade and even in the 90s over to China as the new low-cost jurisdiction, that has peaked. The cost is rising, environmental awakening is underway in China, and the health and safety standards are also rising. And China has a problem automating because it has all these people that need to be employed. America has gutted its manufacturing base, so now it's a no-brainer to move manufacturing back to the United States in a highly automated manner. It's not going to be a huge job creator, but the process is already underway. However, every component is not going to be sourced in America. That sort of totally violates these, the economic laws of efficiency, where you have the jurisdiction that can produce a component and input as more cheaply than everybody else. They should be able to do that and sell to everybody else. So I don't think pulling apart all these trade agreements is really going to work. If he does try it, if he gets the support of Congress, you will see the rest of the world simply bypass the United States, and they'll become isolated. And I just don't see that happening with the world's biggest economy. This stuff about making America great again is absolute BS. It is still the greatest nation, has the biggest economy by far. Its military is the single superpower military. When did America stop being great? I mean, it's total nonsense what he's talking about. But if he were to do that, that's like conceding defeat. It's like saying America is in long-term decline. We better pull in the barricades and keep the hordes outside. The vandals are not going to invade America.
So as far as how this ties to the resource sector, gold in general, I imagine you're pretty bullish on gold.
Well, yes. I mean, for two reasons. One, Trump has a profound ignorance of foreign affairs, of international relations. The risk of doing something stupid that creates a geopolitical crisis is extraordinary. And when countries like China and Russia see that the president is at odds with the people, the risk of them pushing the envelope, annexing the Baltic states in the case of Russia, saying, what are you going to do, America? Or China annexing Taiwan, what's America going to do? Start conscription, draft people, send them over there to get killed for this sort of thing? That risk, that danger should drive gold up in real prices. And that's what's really important for juniors, because this fiat currency debasement and hyperinflation narrative is not helpful for a project that doesn't work with what we have. I mean, $400 gold in 1980, inflation adjusted to present, is $1,200 gold now where we are. It's like big deal. So the price is 3 times higher than it used to be. Nobody is better off. But the other thing, if they do embark on fiscal stimulus and infrastructure renewal that's debt funded, at this point in time where the unemployment's down at 4.5%, where the economy is growing again, that could create inflationary pressures, which bring back the gold narrative, which has been in the doghouse totally wrong for the last 5 years. And again, it's the expectation of gold overshooting the actual inflation, anticipating inflation. That creates at least temporary real price gains, and it has a tremendous mobilizing force for the market. The bad thing about last year is when things turned around exactly 1 year ago at this conference, we had until mid-August, it was all linked to gold trending up. As soon as gold stopped trending up, everything stopped on a dime. And even in this year so far, it has been gold's recovery, which across the board, gold and all metals, it still drives the sentiment in this sector. So I think the whole sector, after a hideous 5-year bear market, a tentative turnaround last year, which most people missed because you had to be insane to still be long in January of 2016. Now we've had a pullback. Now everybody can see, they can see the logic for things getting better. Prices are not as high as they were in August. Now is the time to expect a lot of investors to come back into this sector and catch it with a lot of running room over the next few years.
Well, you can certainly see the enthusiasm here. How do people follow you, John?
KaiserResearch.com.
Great. All right, John Kaiser here at VRIC 2017 for Mining Clips. Thank you.